Welcome everyone to another episode of the Endeavour Exchange, where my colleague and partner in our business practice here, Grant White, and I will be talking about all trends affecting your money here. So we've been away for a couple weeks here, but we're glad to be back and kind of glad to kick things off here. I'll be tossing the first question your way, Grant, and we've seen. Obviously, we're still talking about COVID-19 here. If we look back a year and even longer, it's hard to imagine that, or at that time, it was hard to imagine that we would still be in this, but we are. But one of the kind of surprising parts about the pandemic and some of the effects that we've seen in lockdowns and whatnot is essentially the service sector. Grant, so the question I wanted to pose to you is, what can you tell us about the service sector and what it's telling us about the economy at this point?
Yeah, well, first of all, good to be back, although I missed our fireside kind of setup in the studio, but obviously with restrictions, we're going to keep things separated. But restrictions are opening up in Manitoba coming this Saturday, I think, so things are getting better. There is light at the end of the tunnel. We're getting through this. I don't know who would have thought we would be in it still at this point, but I'm glad we're on the way out, I believe. So that's good news. But I mean, speaking of the pandemic and things that are probably unexpected, is that there's been surprises on both sides. There's been surprises of things that maybe weren't as successful and as resilient, and there's been surprises on what has been so resilient. And so the service sector overall, just in general, has been extremely resilient throughout the pandemic, and probably to a lot of people's surprise, given where we were last March 2020 and March, April kind of thing, and what's going on. And so we've seen some really resilient industries out there on the service side of things. And we've got a chart to show this as well, which, long story short, is we've seen a really nice recovery. Now, the reason why this is really interesting is because it shows that we are on a path to the recovery that we'd all kind of hoped for, and in our mind, because we can see that if services are ahead of the game right now, what does that look like towards the end of 2021? We're already a little bit ahead, basically, is what it looks like. Now, not all services have kind of kept pace. We know that the hospitality sector is definitely got an anchor tied around its neck right now. And we see that in Winnipeg. We see that across the world. That's going on to this day. And so the optimism around that, though, is that, we're doing okay. In general, we're doing okay, but we're not fighting we're not firing on all cylinders yet. And so as things start to come back online and demand's there. Travel, we've seen that. People want to travel. They want to get out. They want to go stay in hotels. They want to, do all of these things. So that's going to happen. It's going to be there. And I think that bodes really well for the second half of 2021 and then ultimately the recovery. And I think that bodes well to that thesis of maybe we're entering into this new roaring 20s kind of environment. I think it's still, you got to be cautious around that because there's still disparity between certain sectors. There's still disparity between certain wealth classes, and that's going to be the case. At the end of the day, it does bode well that services have been so resilient, and I think that means we are in for that recovery that we've all hoped for. So that's the good news on this front, is that there's resilience. Like I said, there's a lot of things still to go. There's a lot of things that need to catch up. There's a lot of businesses that need to come back online, and that requires some support. So we'll see how that all plays out. But so far so good. Let's put it that way. So, Brent, just something that happens. We deal with this every single year, and so this is why I wanted to ask you this, because we deal with this every single year. We're dealing with this right now with a number of clients. But when marital breakdown happens, there's certain things that you need to take care of, and certain things you need to be advised of and aware of. But especially around estate planning considerations, what do you need to worry about there?
Yeah, good question, Grant. And like you said, it is something that we deal with all the time. Every year it seems like there's a couple clients that we work with that are going through this. It's very normal to go through a marital breakdown. Obviously, we don't hope that for any couples, but sometimes it's for the better. And with the pandemic here, I wouldn't be surprised. People have had to stay at home a lot longer, and maybe they've realized they don't even really like each other as much as they
Yeah.
thought. But this is going to change. I wouldn't be surprised if we saw some changes here in what's already, I guess, what you could already consider as a high divorce rate relative to what past divorce rates look like. And so, at the end of the day, if you're going through a marital breakdown and a divorce, it's a stressful life event. Not only is there personal conflict and decisions around dividing assets, custody rights, living arrangements. There's just so many decisions that need to be made, and I think what happens often is estate plans can get neglected, and obviously we know from our experience that this can come with considerable consequences, which is why I think it's important that we're talking about it today. There's really five main areas that I wanted to highlight here with your question, Grant, and the first is will planning, the second being powers of attorney, registered plans and beneficiary designations there, as well as insurance beneficiaries, and the last one being family trusts. Now, will planning. Most provinces, there's legislation in place that does revoke, the bequest to a divorced spouse. So, because of this, many believe that they don't need to touch their wills. They don't require any attention because the law will take care of it. But one of the things that you have to consider is the nature of an individual's financial position when they go through a divorce can often dramatically changes due to the divorce. So if there was intent on gifting assets to individuals, your situation may have changed, and this will now need to be reevaluated, reassessed. What assets are we actually dealing with here? Could be a bequest to ex-spouse family members. So maybe there's stepchildren or involved that your will says that XYZ is being left to them, or a portion of these assets are being left with them, and maybe that's not necessarily what you want to have in place in your will. So there's the consideration around that. Most provinces, if the spouse is an executor, this will be revoked. So now you need to look at who is your executor. If you had your spouse as an executor, which isn't always recommended, considering when you're married to someone, there is a chance that both of you, car accidents, whatever it might be. But at the end of the day, if you did have your spouse as an executor, you're going to be looking at, well, who is your executor? That you might not have an executor, so that will need to be looked at as well. Needless to say, a full review of your will is prudent when you're going divorce. And one important thing to note, I think, is that that a separation does not bequest the divorced spouse from any of the assets that are left to a spouse on divorce will no longer be left to the spouse. They're no longer entitled to that. But if it's a separation, this is not the case. So if you're going through a separation, something that you want to look at. Powers of attorney. Prior to the appointment of a spouse as a power of attorney under, whether it's for property or personal care, it's not revoked by a separation or divorce. So now you can run into a problem if the appointed spouse who's now separated or you're divorced with, either they refuse to step down as the power of attorney or they resign and leave you without an alternative attorney, you have problems. So powers of attorney are really important to review when going through this. Registered, I talked about the registered plans, investment plans like RRSPs, TFSAs, RIFs, and the beneficiary designations there. Unless a change in the beneficiary designation is completed, the former partner will continue to be entitled to the proceeds of those registered plans under which they're the named beneficiary. And so this actually is a really big concern, especially when you're looking at things like RRSPs and RIF accounts. If you pass and your ex-spouse remains a beneficiary, they essentially will receive the entire gross amount of the RSP or the RIF if you leave that in place. And so both of those accounts, the RSPs and the RIFs, those comes with tax liabilities when not left to a surviving spouse that you're married to or a minor. And so now you have a situation where your estate, which is likely, hopefully, set up to be divided to those that you want it to be divided amongst, now the estate is actually smaller because the estate has this liability at death yet the ex-spouse is entitled to the entire amount of those accounts. So again, something that you'll want to review, all those beneficiary designations. Same goes for insurance beneficiary designations. So if you don't change the designation on those insurance policies, your ex-spouse could receive that money, and so it's important to review those with your insurance specialist upon a marital breakdown, or your financial advisor. Yeah, not like I said. If you sometimes this stuff gets pushed aside because you have so much other things to deal with. But if something were to happen, that's probably the last thing that you want happening is all the insurance money going to your ex-spouse.
Well, I think the main thing is you got to also I mean, it's worth the money. Sit down with an estate lawyer and have a review. I mean, it doesn't cost that much to do that type of thing. But we've come across so many situations where there's been a marital breakdown, potentially even years ago, and the will is not it's not appropriate for what their wishes are going forward, right? And so whenever there's a marital breakdown, yeah, talk to your financial planner, talk to your wealth manager, investment advisor, whatever.
Lawyer.
But also bringing a lawyer in is never a bad idea when it comes to these things. Just to get that thorough review of it, just to make sure everything is taken care of the way you want it to be done.
That's something that's important to note. You need to talk to all those professionals, let them know that you're going through it, and you need to engage the right professionals. When we're dealing with this type of stuff, we're working very closely with the lawyer, because at the end of the day, when it comes to will and estate planning, they are the ones drawing up the will. They are the experts in that field. We can help guide, but at the end of the day, you do want the eyes of a person who is considered an expert reviewing these things. The last one, the point that I wanted to bring up, and this is because for us anyways, many of the clients that we work with are business owners, and they've established what we call a family trust for estate purposes and succession purposes. In a case where one or both parents could be trustees and or beneficiaries of the trust, you're going to want to review how this is laid out. A separation or divorce of the parents should trigger the review of the trust agreement, and whether there needs to be any changes in trustees or trust distributions as contemplated under the trust agreement. So another very important one there for business owners and individuals who have family trusts involved. So I think it after going through those 5 points, it goes without saying, when you go through a marital breakdown, it's important that you talk to the advisor, talk to your accountant, talk to your lawyers, insurance planners, and make sure that they're aware, so that the appropriate planning can be done to make sure that if something were to happen to you, as Grant, you had mentioned, that things happen the way that you wish them to happen.
Right. Absolutely.
So Grant, this is came from an article that I found on Bloomberg, and it looked at a survey, and again, they're asking the age-old question about, do you have enough for retirement purposes? And I don't think it's a surprise to necessarily us, because we work in this field every day, and we work with people and have these conversations and pose these questions. But it may come as a surprise to people who aren't in this industry. But basically, the question was asked of people in their mid-50s and mid-40s, mid-50s about how are your retirement funds invested, and a large majority of those people had no clue. So I just wanted to, I'm not necessarily asking you how are your retirement funds invested, Grant, because we have a lot of these conversations. I probably know that information, but I wanted to ask the question to the viewers, and maybe you could comment on the question and why it's important that the viewers be asking themselves this.
Well, my portfolio is really simple. It's 100% Bitcoin, as you know. So no. No.
It is not. Yeah.
No, that is not the way I'm invested. I'm invested the same way we invest our clients for the most part. But another study, it's shocking, not shocking, because we see this so often, right? Like you see, like as you pointed out. So, this study, I think it was done by Schroders, says half of people between the ages of mid 40s and late 50s have no idea what they're invested in. Not surprising. What I also found kind of interesting, again, not surprising, is that when asked, the question is of, how well are you on track, basically, and how well have you planned for your retirement? Now, 35% of men said we're good to go. I mean, they have no idea what they're invested in, but they said they're good to go. Whereas only
overconfidence, that's an overconfidence bias kicking in.
This is what I'm saying. Like only 17% of women thought they were good to go for retirement, and I would argue they're probably way more right. I mean, than the 35% of men. So that's kind of more the telling story, I think, in this is that once again, people have no idea where they're sitting in terms of like their plans for the future, their financial plans, their retirement plan. The studies continue to show us time after time after time that people are just not aware of where things are. And there's no plan in most cases to get them to the place that they want to be in the future. There's no financial plan in place. Whether somebody said there's a plan in place or not, there's no plan in place from what the studies are showing that they're on track to accomplish their goals. Now, people sometimes accomplish their goals just by winging it. They get there because there's enough money, or they have to adjust their goals to fit what's available to them at the time. Like maybe their retirement income is more dependent on what they've been able to save versus what they actually plan to do, and that's a sad scenario too. I mean, we talk about the risk of under-living all the time. I think that's one of the major risks out there. People aren't planning for the future, and so they're selling themselves short. Your retirement is not what it could be. Maybe it's 75% what it could have been, or 50%, or who knows. So that's the real sad story in all of this too.
Well, and Grant, I know we talk about this in the office all the time, and you, I've heard you on multiple occasions talk about clients, or talk to clients about this. The changes, the longer your time horizon, the more you start, the sooner you start having these conversations, the more impact you can actually have. If you every year that you delay this, it becomes harder and harder to make the changes that are needed for you to live the way that you want to do, that you want to in retirement.
Correct. Like a simple adjustment today. Now, I use the bow and arrow. You like the golf reference, but a simple adjustment in the tee box makes a huge difference to where that ball goes down the fairway, or not a hit in the fairway. Period. Right. So that's the thing. Like the earlier you have the conversations, the easier it is to make adjustments today for your plan. Now, under living means living for today too. I mean, like if there's that risk, like I'm not this guy that says, hey, push it all off till tomorrow. Like, me, Brandon, I'm not saying that, but it's still important to have a plan for the future at the same time. And so anyway, this study, I think that more than anything, again, continues to highlight the fact that, people just aren't aware of what they need to do to be successful in their planning, and they don't know what they need to do. If they were aware, if they did know, way more people would do it, I'm sure, and so that's something that as advisors, we need to spend more time and emphasis on is the planning. Like, we do that here, obviously. We're a planning first kind of place. That's what we do. But there's still a real lack of planning out there, I think, in that type of advice. And I think that's what really needs to be done in order to be to help people to be successful long into the future. And as consumers or clients or investors, I think that's what you need to demand going forward. You need to demand that a plan, and a true plan that tells you what you need to do to be successful. Because then you know what rate of return you need in your portfolio. Then you know how your portfolio should be designed. You don't need to be into the weeds of like these.
I was just going to
know that you own this Renaissance fund or this Fidelity fund. I think, sorry, you should know that, but like the details of what's in those funds, that might be over your head, and that's okay. Like you don't need to be a financial advisor. You don't need to be an investment advisor to be successful.
Having a basic understanding, I think, Grant, of like how a stock or what a stock is, what a bond is, and how those work in a portfolio, I think is a great starting point. You don't need to know the details, but just understanding how a portfolio gets designed can help you just feel comfortable that you have the right portfolio for your given circumstances.
Yeah, and again, that's the onus is on, I think, the advisor to provide that information and to offer that sort of education. Again, it's up to you as the investor to take that in, but it's up to us as the advisors to present that to you to make sure that you can be aware of it and understanding volatility and comfort levels and things like that. So anyway, again, just another study highlighting what we already know is that people are underserved as it relates to retirement planning and other planning in general, but retirement planning in particular. And so I think it's time for a change on that. And so anyway, we'll put the responsibility on everybody because it's up to us as advisors to educate, and it's up to individuals as the client to receive that education when it's offered. But for the most part, it's the planning work needs to be done. So, Grant, pandemic again. This is what we love to talk about, is the pandemic. There's still millions of people unemployed. And that's the harsh reality of the pandemic and what's going on here. And there's still lots of businesses shut down. So with millions of people unemployed, why is it that companies are still having a hard time finding workers?
Yeah, it's actually it's a very interesting question, because, as you said, we have millions of people unemployed, yet we're hearing of companies who are struggling to get, there's jobs out there, and they're struggling to get workers. I wanted to just pull up one chart here just to take it's a combination of three, and it just looks, changes in job openings. So we see, manufacturing, construction, retail. There's a growing percentage of jobs that have continued to open up. Hospitality, obviously, one of the most severely affected sectors in the pandemic. It's ticked upwards and it's recovering. It's still below pre-pandemic levels as it relates to job openings, but it is growing. And then we have another chart there where it looks just at the openings and the applications. And then the last one we see where it looks at people in the labor force that are actively seeking work. It's still below, well below pre-pandemic levels, or well above, I should say. There's more people out there seeking work than there was before the pandemic. So why can't these companies, find these workers? Well, here in North America, we're seeing economies coming right back. Lockdowns are easing. Vaccinations are progressing. Yet millions are still unemployed, and it's, as I mentioned, it's far higher than it was in pre-COVID times. But the sectors, manufacturing, restaurants, and construction, seem to be the ones that are struggling the most when we're looking at the sectors that are trying to find people for these job openings. Surveys can give us a little insight here, and some of the information that some of the surveys that have been out there. This is in particular U.S. data, though I wouldn't suspect it's too much different than Canadian. But there's a fear of getting and spreading COVID-19 out there that's preventing, maybe people who don't necessarily need to go back to work from going back to work. A big one, school closures. You have, a single parent, or even parents that, you're trying to figure out who's going to be staying home with the kid, and whether or not you should be entering back into the workforce, and considering that you don't have childcare. So, school closures are affecting this. In the U.S. and here in Canada, there's unemployment benefits that are still out there, and in some cases paying more to certain people than their previous jobs were. So with all the risks with catching COVID and things like that, when you can make a very similar amount of money and stay at home, well, I don't necessarily blame those individuals if they're concerned about COVID, right? So at the same time, we are seeing robust hiring despite this labor shortfall. We're continuing to add jobs each month, though these shortages, however, are, I think, threatening and holding back a lot of the growth that we could see in this time. Businesses are foregoing work and expansion because they can't get people back to work. So there's opportunities out there for growth, but we're struggling to get people to actually do the labor. So what we've been seeing now is that you're actually seeing a lot of these companies wages higher, trying to bring people back to work. We've seen it from businesses like Walmart, Amazon, Chipotle, Costco. It's actually bringing with it its own concerns over what this is going to do to inflation, as people, if wages have to rise, and now people are making more money, what does that now do to prices that have already, we're already seeing pricing pressure from some of the supply chain, we've been told is transitory inflation. But I know there's concern out there if we see too drastic of wage. I think wage increases are a good thing. We want people to have more money and be able to spend it. But if it's too drastic, what does that do to this whole inflationary scenario there as well? So, the belief is there. The belief out there is that these labor shortages will ease as vaccinations and pick up and schools reopen and those benefits that I talked about, those unemployment benefits expire. But some of the data here with the increase in wages are suggesting the market's actually tighter than what the data is suggesting here. So, you know, do we have an answer here on how this all plays out? No, we don't. But I think, when we look at some of the information coming from those surveys, it can give us an idea why companies are finding it hard to get workers back and get them working. And like I said, what that does and how that affects the economy, I mean, it remains to be seen. We'll be watching it very closely, but it's something that is a challenge for businesses in Canada, in U.S. and likely across the globe here. So.
Yeah, it's an interesting case study that's going on, right? And so I mean, we won't know the answer until we're through it. But I think it's very interesting. I mean, I think it's short term because it has to be. A lot of these concerns will get ironed out in time. But you're right. I mean, what does that mean for the next year or 2 years maybe? And especially as we're trying to get the economy off life support and get off stimulus and things like that. So it's gonna be really interesting. But eventually people will have to go back to work. Otherwise, the taps get cut off on other areas too. So
the other thing that I didn't mention that I think is worth considering when we're trying to figure out what's driving this problem is, there may be a lot of people that have just exited the workforce, the labor force altogether. If they were borderline retirement age, or maybe we talk about the pandemic and how it's disproportionately affected women in the workplace and their role. Maybe there's a lot of people where because there's no childcare, it's forced a lot of these individuals to completely be out of the workforce and stay home with the kids, whether it's the husband or a wife or it doesn't really matter. The fact that schools are closed and that people are having to look for care for kids and school kids at home, I think could push some of these individuals out of the workforce and to a more stay-at-home role to begin with. So, it's an interesting, like you said, it's an interesting experiment. We don't know exactly how it's all turning out, but looking back, it'll be interesting to see and to learn from what we've gone through here.
Yeah, I think that's such a good point. Just the changes that we've seen and just closing schools is a huge one. I mean, people are having to either work from home or not rejoin the workforce because it's like, well, I've got my kids at home, I can't, or I can't go. So yeah, it's a huge issue. It goes up beyond just like kids being in schools, obviously.
Well, the school part is interesting too. I'm listening to the Premonition just on Audible, book there by I'm going to lose the author's name here, Big Short, Michael Lewis, and what's super interesting is that it was the Bush administration when they were going through pandemic preparation and whatnot. Schools was the first thing with all the smart people that they had. They figured out kids were the biggest spreaders of these things because they just lived differently. They had a different sense of space. They had they invade each other's space. They're all over one another. It's hard to explain to a child why you need to wear a mask or why you need to wash your hands all the time. Just different behaviors, right? So they found that schools were the first thing that needed to be acted upon and closed to really contain the spread of the virus. But it's such a politically charged, because look at what happens when you close schools. It sends a ripple effect through economies like we wouldn't believe, right? So there's definitely these political challenges with making that very difficult decision. And we're seeing it here with these companies that can't find workers. People are having to stay at home, and that's affecting the economy. I'm not saying I'm not leaning one way or the other. I'm just it's interesting to see how this one important thing and the decision about schools can change everything that we're dealing with.
Yeah, no doubt. I mean, again, I'm pretty big on saying that I don't think we'll know fully what we should have done for at least 5 years or maybe longer because, I mean, yeah, you just don't know. And I think, there's a lot there's a lot of plans that were thrown out the window, obviously, but 5 years from now, we'll know what the best thing to do was, and we'll go from there. And until that time, it's up for political debate, right?
And hopefully we learn from it, right? Hopefully we're able to look back and go, here's where the errors were made, and better be better prepared for any future pandemics. But with that, Grant, that wraps it up for today on the questions. Always appreciate anyone who is tuning in today and even after today watching the videos. If you have any questions, we're always happy to weigh in on different topics. So never hesitate. You can find us on our website, www.endeavourwealth.ca. Both Grant and I's personal contact information is there. Check us out on YouTube, Facebook, LinkedIn. We put out a lot of good content, and it's coming out to you guys consistently. So we'd love for you to join us there. But with that, we can sign off for today, and appreciate it, Grant. Always a fun time hopping on here with you.
Thanks very much, everybody. Take care.